by Robbie Lynn, and that's going to go as soon as we get to the matchup.
No, it just doesn't go through.
Yeah.
That would be fine.
That was very, really nice.
Yeah, I see a lot of people.
One, two, three.
Kind of, yes. No. Actually, this is something trying to do something like, you know, they do use supercomputers to create synthetic molecules and stuff. Have you heard of something like that? Some people have actually talked about trying to do computer powers and you can. Oh,
Hi everyone, how's it going?
good.
One, two, three.
Cool. So I'm Robbie Lynn, I'm an associate at Accelerate. We're a VC firm here in Seattle.
I'm Kate. I'm the founder and the CEO of Accelerate. Thanks for having us. The topic of our discussion today is evaluating investment opportunities in blockchain, which is, I think, an important topic given how much hype we've seen over the past couple of years. So hopefully we'll shed some light on our investment process.
Thanks so much for being here, Kate.
Thanks for having me.
Sure. So tell us a little bit in terms of starting off how you got involved in this space and why you decided to create Accelerate in the first place.
So in terms of how I got involved, I think like most of us, I'd heard about Bitcoin. That was early 2012, 2013. I didn't think much of it other than the currency, but given the fact I wasn't born in the US, I was born and raised in a developing country, I saw an opportunity for Bitcoin to actually become a hedge currency against a local currency such as Venezuela or Russia, where I'm from, Russian ruble. So I fortunately ended up becoming an investor in Bitcoin first. And then a couple of years into it, I was working for a global market research firm called Gartner. We started getting inquiries come our way, and one of those inquiries came from the government of Honduras. At the time, it was 2014, government of Honduras was evaluating the land title project. And it sort of, the light bulb went off for me because I saw this use case in an environment in a country where there's a little bit of lack of trust, let's put it that way, and millions of people either don't have asset tracked, or the actual title of the land is tampered with. So I saw an opportunity for blockchain. I became a miner as well. I bought a couple of mining rigs that I expanded, built a farm, and started learning about this technology that way.
Awesome. Thank you for telling us a little bit about the philosophy. Could we maybe go into the strategy of Accelerate and in terms of investment thesis?
Do you want to switch over there?
Yeah.
So in terms of the philosophy of the fund, our belief is that, especially in this space today, the technology is extremely mature, so capital alone is not sufficient. We can't just invest in companies, sit back, relax, and hope they're going to be successful. So the philosophy of the fund when we started it last year was about creating an accelerator platform. Not only are we going to provide capital to the startups that we invest into, but we're also going to provide support. And in our world, support means three things. One is talent. We believe that lack of talent is one of the gaps in the space. Regardless whether you're a startup or a larger enterprise, you want to hire the best talent, and there's not enough blockchain developers out there. So we're partnering with universities, academies, we're creating our own curriculum to plug talent into our portfolio companies. Number two is advisors and mentors. We have a network of serial entrepreneurs who started companies before, sold companies, and now they're going to coach and support the blockchain founders. And the third element is access to markets. That includes two things. One is private markets. We work with Fortune 500 companies and their CIOs, and giving them an opportunity to learn about blockchain and early stage innovation. And the second element is governments. We work with 4 governments at the moment. One is Georgia, second one is Azerbaijan, Turkey, and Singapore. They are some of the early adopters of blockchain technology, and we are providing our portfolio companies with an opportunity to work with some of the public service use cases, such as voting, titles, etc.
Yeah, definitely in terms of support, something beyond just capital is totally necessary in this space.
But to answer your question, there are 3 types of companies we invest into, the way that we kind of categorize the entire market. Number 1 is platforms. So if you've been following this space for some time, you would have heard about this philosophy called FAT protocols. The belief is that, unlike the internet, within blockchain, protocols is where majority of value creation and value capture is going to happen. That's why you saw Ethereum and the likes of Ethereum gain massive valuations, get a lot of funding, and we have made an investment in one company called Hedera Hashgraph that was just mentioned in the previous session. The second category is applications, which I think is even more important in the long term. So what is applications? Applications is disintermediating intermediaries in traditional legacy industries. Take insurance or banking or financial services or healthcare. There's a lot of inefficiencies where blockchain can create value by simply taking out the fat out of the system. That's disintermediating the Web 1.0 companies. Then think about Web 2.0 companies. So Web 2.0 companies are companies like Amazon, Facebook, Google, etc. And think about all the data that those companies are capturing. So what do they do with the data? They sell that data, and in the case of Google, $50 billion valuation comes from the sale of your data. So why don't you, as an individual, capture that data? There's a concept of self-sovereign identity, and a lot of companies are working on that. And monetize on that data instead of letting companies like Google and Amazon and Facebook monetize on it.
Yeah, definitely. The value capture is something that we're going to touch upon in a bit. So we've got platforms, applications, and ecosystem startups. And you mentioned giving support to these companies just beyond capital. So how do you evaluate the various components of the companies that might end up making it into BlockAccelerate's portfolio?
So I didn't mention the ecosystem, so thank you. Briefly on that ecosystem would be examples of Coinbase or Bittrex or custody solutions in the space, or the company we invested into is an algorithmic trading platform for crypto. But the way that we evaluate projects really depends on which category they fall into. If they fall into the category of ecosystem startups, then technology is less important. So we look at the team, we look at their track record, and team is an extremely difficult evaluation criteria to assess. The chances are that when the company is just started, the business model that it was envisioned to be is going to stick through to the exit is very unlikely. So the team has to have some level of track record or previous exits to show that they can go through ups and downs, challenges, and actually pivot successfully to a company that will be successful. So that's why the team is extremely important for us. We look at technical talent, we look at business talent, but it's not science, it's more of an art. What do you think? You've looked at 100 projects last quarter.
Well, definitely, it does depend on the type of company, but also like the stage of the given project in terms of where they're at in development. If it's a younger project, that team has to be very resilient in terms of being able to go through all those ups and downs and pivots. So a track record of projects that they've built that have succeeded or gone all the way through is definitely really good. Another thing is having worked together before, those team members, because it can be very stressful for a team who's trying to struggle through those pivots and ups and downs, and that can put a lot of stress on a team that's almost breaking apart. So if they work together before, that's evidence that they can manage those pressures, and that's a good indicator of being able to succeed in the future.
So in case of a platform, for example, or a protocol, team is also important, but we look at tech a lot closer. The reason is because tech is oftentimes an indicator of how strong the team actually is. So when we evaluated their hash graph, yes, we looked at their track record, we looked at the CTO's background, as the CEO's background, but ultimately we wanted to make sure that the technology behind what they were building was differentiated enough from the status quo. And the status quo is really Ethereum and it's blockchain. What they came up with is extremely new paradigm shift, if you will, in the technical architecture that allows them to achieve 200,000 transactions per second compared to 14 transactions per second in Ethereum. So in that case, team was important, but tech